Hi everyone, Nick here from House Buyers of America. 2024 was a very turbulent market. A lot of people thought the market would crash. Didn't happen. Many people expected interest rates would go way down, even below 6%. Didn't happen. And many people thought home prices would plummet. That didn't happen either. In fact, all the experts, Zillow, Redfin, Realtor.com, Fannie Mae, Freddie Mac, they all got it wrong by a long shot in some cases. And today we're diving into something everyone wants to know about, the real estate market forecast for 2025. What's going to happen to home prices? Are interest rates finally going to give us a break? And is it going to get easier to buy or sell a home? Stick around because I've got answers you need. On this channel, we don't just talk about data from an academic perspective. Here at House Buyers of America, we're practitioners. We're buying houses actively in 44 states. So we get to see the market in ways that few do. So we combine good real estate statistics with our boots on the ground data in order to come up with the most accurate forecasts. We actually see real time by doing transactions day to day in these markets. Before we get started, make sure to subscribe for expert tips and insider insights to stay ahead of the real estate market. And don't forget to check out our link in the description for our blogs with even more details on today's topic. Now let's get into it. What's the first thing to watch out for when it comes to predicting the 2025 housing market? Well, understanding the early signs can help you plan whether you're buying, selling, or just curious about the market trends. Here's some things to note. 3 key factors: inventory levels, consumer confidence, and builder sentiment. These drive the forecast. Inventory levels. Are we seeing more homes come on the market or still dealing with a tight supply? Consumer confidence. How are buyers feeling about making big purchases like a home? And builder sentiment. Home builders often give us the first signs of what's to come in housing trends. Now, the big question is, what's happening with home prices? Are we finally going to get some relief with home prices? Not quite, but there is some good news. Home prices are expected to grow more moderately over the next 5 years. After a sharp rise in the last few years, prices are forecasted to increase about 17% cumulatively between 2024 and 2029. So right here, 2024 to 2029, 17%. That's roughly a percentage point or so above the rate of inflation, which is a lot lower growth than it was before. It was way outpacing inflation the last few years. So why is this happening? 1, a combination of high mortgage rates and limited housing inventory is keeping the market competitive. 2, while more inventory is expected to come onto the market in the coming years, demand is still significantly outpacing supply, with an estimated 4.5 million homes needed to meet current demand. And lastly, buyers are adjusting the higher borrowing costs, which has slightly slowed the runaway growth prices seen in the previous years. However, price changes will vary depending on the market. Areas with strong demand and limited inventory will continue to see price growth outpacing the average in the nation. May see continued 4, 5, 6, even 10% growth in those areas. Conversely, regions that saw explosive growth during the pandemic, like Boise, Idaho, Austin, Texas, are experiencing cooling effects as prices stabilize. In fact, those 2 cities have had quite a reckoning the last year or so as their prices have gone down quite a bit. So what will happen specifically in 2025? Well, there's some different forecasts. As you can see on the board here, we've got Zillow predicting a 2.6% increase in home prices in 2025, Redfin 4%, Fannie Mae 3.8%. And so they're pretty much in line somewhere between 2 and 4%, Zillow kind of being on the low side. So what do we believe here at House Buyers of America? It seems pretty unanimous that home prices will continue to grow next year. There's simply too little supply, and that's not changing anytime soon. We feel Zillow's prediction is a little low. We predict home prices will be somewhere between 3.5% and 4%, right in line with Redfin and Fannie Mae, kind of in between those two. This is more in line with historical average growth. So we're kind of getting into a normal market. This is a much welcome change from the skyrocketing home prices during the pandemic, and we all knew that wasn't sustainable. So we're finally getting back to a more normal market. We've noticed that homes are sitting on the market a little longer. This is in our personal inventory. We've had to drop prices a lot more in 2024 than previous years. So we're definitely feeling the market shift. Here are the key takeaways for sellers. The market is still in your favor, especially in areas where demand remains high. However, as inventory grows, price increases will be moderate, and pricing competitively will be more important than ever. So you won't have as much bargaining power as you did in prior years. My recommendation, if you're thinking about selling your house, better do it now while the getting's good. Sell while the market is still high. You never know what's going to come down in the future. It could be wars breaking out, the economy could collapse, there could be any number of things. We don't know. No one has a crystal ball. But we do know the market's good right now. Now, a key takeaway for buyers, while prices are rising more slowly, affordability will still be challenging. Focusing on areas with growing inventory and considering new construction homes may provide better opportunities. If you've been waiting in the market, hoping that prices will crash and you'll get a better deal, my advice is quit waiting. Home prices aren't expected to fall in the next several years, and rates aren't dropping as fast as previously expected. So if you really want to buy a house, just dive in. Now is as good a time as any. Start building equity instead of renting and throwing your money down the tubes each month. Now let's talk about the impact of interest rates. We got that over here. We've got forecasting from Fannie Mae, Redfin, and Realtor.com. Interest rates have been a huge topic lately. Are they expected to finally plunge in 2025? Not exactly. While we might see a small decline, it's not going to be the significant drop that buyers were hoping for. According to Fannie Mae's November housing forecast, the average 30-year fixed mortgage rate is expected to hover around 6.4% in 2025, only slightly down from current levels. And by 2026, rates could dip further to 6.1%. So we've got that over here, 6.4% 2025. Not the huge 1% or 2% rate drop that people were hoping for. Redfin predicts the rates will stay high, near 7%. They're on the high side of the scale of the different forecasts. Realtor.com is forecasting rates will be in the low to mid 6% range in 2025. So them and Fannie Mae are pretty close. So why are rates staying high? The economy is still performing better than expected. And as long as that continues, rates are likely to remain elevated. Federal Reserve Chair Jerome Powell has cautioned that forecasting rates is highly uncertain. But economists agree that we shouldn't expect a return to historically low 3 to 4% range anytime soon. So what's our take here at House Buyers of America? I think we're going to see rates land somewhere between 6 and 6.5% in 2025. Why? While inflation is likely to ease gradually, factors like tariffs and energy prices and the labor market are keeping rates from falling significantly. And plus, once rates drop below 6%, I believe there's going to be a psychological tipping point for many buyers sitting on the sidelines, and that could spur huge demand. In other words, the market's going to go nuts, and we're going to start to see another boom market once rates go below 6%. And I don't think the Fed wants that anytime soon. Remember, inflation drives interest rates. So the lower the inflation, the lower the interest rates go. While inflation's high, rates will have to stay elevated to keep the market cool. So what does this mean for buyers? If you're waiting for rates to plummet, it might be time to adjust expectations. And besides, once rates fall below 6%, that could bring on a lot of competition and home prices could go up. So locking in a good deal now and refinancing later may be a smart strategy. Key takeaways for sellers. Stable rates in the mid 6% range means buyer demand will likely remain steady, but affordability challenges persist. Pricing your home competitively will be critical to attracting serious buyers. Here's something interesting going on in the real estate market. One of the biggest things hurting housing supply and causing home prices to stay higher is what's called the mortgage lock-in effect. And this is where homeowners who purchased a home or refinanced a home in the low 3 to 4% interest rate are locked into their home because they don't want to sell their home and have to buy another home at a much higher 6% interest rate. Kind of makes sense. So how long will the lock-in effect take place? Leslie Hale, chief economist of Realtor.com, says that in mid-2024, 84% of homeowners had a mortgage rate under 6%. And that's down from 89% the year earlier. So here you have 89% in 2023 had a mortgage below 6%. In 2024, it dropped 5 percentage points to 84%. And she's predicting that in 2025, or by the end of 2025, it's going to drop to 75%. So gradually, the mortgage lock-in effect is having less and less impact on the market as time goes on. Home sales are poised to rise. Why is 2025 shaping up to be a stronger year for home sales? First off, I want to clarify, we're talking about the number of units sold, not the home price. So we already know home prices are going to be increasing moderately. but number of units sold, home sales growth is expected to go up quite a bit faster. There are several reasons why home sales are expected to increase. So right up here on the board, we have number 1, pent-up demand, number 2, millennials, number 3, seller confidence. Pent-up demand, buyers who are priced out or held back by high interest rates in 2024 are likely to re-enter the market as conditions improve. Many people finally accepted that high rates are the new norm. Number 2, millennials, the largest generation of home buyers, is reaching the peak buying age, fueling demand. Millennials can no longer live in their small houses. They're bursting at the seams. They're tired of living with mom and dad. They've got to find a bigger place, and this is their year. And number 3, seller confidence. More sellers may list their homes as market conditions stabilize, increasing inventory. In fact, NAR reports that new home sales are projected to rise by 11% in 2025, reversing the decline seen in 2024. Why is this good news for buyers and sellers? For buyers, it means more options and less cutthroat competition. For sellers, it means a more balanced market with serious buyers ready to make a move. So what does all this mean for buyers and sellers? What should you do if you're thinking about buying or selling in 2025? Well, for buyers, stabilized pricing and potentially lower rates means you can feel more confident about your budget. But don't wait too long. More buyers enter the market, competition could heat up again, meaning prices could be jacked up even higher. Remember, marry the house, date the rate. So focus on finding a good priced home and don't worry so much about the interest rate. Remember, you can always refi later if the rates go down. For sellers, if you've been holding off, now may be the perfect time to sell while prices are steady and buyer demand is still strong. Listing before the market becomes oversaturated could help you maximize your profit. So there you have it, our real estate market forecast for 2025. Stabilizing home prices, potentially lower interest rates, and an uptick in home sales are all signs of a more balanced market. Whether you're buying, selling, or keeping an eye on market trends, now's the time to plan your next move. Want to dive deeper? Check out the links in the description for detailed blogs that break down these topics even further, and make sure to subscribe. We'll be sharing monthly predictions and forecasts to keep you updated at all times. And as always, don't forget to like this video if you got value out of it. See you soon.